Let's take a look at some charts on Dash from this week's article on Brave New Coin. So Dash is one of these hybrid proof of work, proof of stake networks, and frequently people argue with me that it's not even proof of stake. Fine. Effectively, for everything you see me put together or produce, I will refer to Dash as a proof of stake network. Other people will also argue it's not really a privacy coin and its privacy capabilities are neutered. It's very big tent in that respect, in that Dash does many things, fits in a lot of buckets. So if we compare all the privacy coins, if we consider Dash a privacy coin, you can see it's second to XMR in market cap. It's basically second in total daily transaction volume. Now you can't see XMR or Grin's transaction volume because it's obscured. So some people automatically would say, well, if I can use Monero or Grin as a privacy transaction, why wouldn't I do that over using anything else? And I agree with them, but nonetheless, Dash has privacy capabilities, as does Decred. Very similar in that it's proof of work, proof of stake hybrid with optional privacy transaction capabilities. If we look at total fees, that's led by Monero pretty strongly here. Monero's had an all-time high in transactions per day, which is likely driving the fees up. Dash is second in fees, though, just compared to everything here. Dash is first in transactions per day. So even though Dash has far more transactions than Monero, its fees are much less. So that may point to some scalability issues for Monero, or just the function of Monero's network from the privacy perspective requires a higher cost. We can talk about bulletproofs. You can look that up. You can really dive deep into this stuff and say, okay, this is default privacy, it's more expensive. This is optional privacy, it uses CoinJoin, that sort of thing. Daily active addresses, it leads as well. Dash, again, you can't see Grin, you can't see Monero's daily active addresses. Dash's daily active addresses likely benefit from the coin mixing stuff. I'll show that on a separate graph. And then on commits, it's basically with everybody else in the middle of the pack. At the very least, the dev side isn't dead, certainly. They have a treasury. Dash is going to live on forever in that. There's always going to be money coming in to produce something. Whether or not that something is good is the market's decision, but they have a treasury component like DCR, like Zcash, that allows them to pay a development team. So Dash just had its version of block reward reduction. Happens roughly every 12 months. So inflation right now is about 6-something%, so it drops 7% every 12 months. It's a bit odd to me then that hash rate has hit an all-time high if block rewards have been decreased. The only way this kind of makes sense is if price perks up mining profitability enough that it can support that extra hash rate, extra difficulty. Another reason this might make sense is that Dash has several ASICs with multiple coin algo capabilities. So if Dash is the most profitable among these 6 or among these 8, however this works for these miners here, it'll just switch to Dash. At least that's how I think it would work. It'd switch to Dash temporarily until the mining profitability is less than another one of these 6. I don't know if that's completely the case here. That'd be my guess. It's either that or there's some hidden ASIC that's not public yet that's coming live for this X11 algorithm. The last ASIC released was in November 2019, so it's not like there's any even announced ASICs that I'm aware of that could be pushing Dash's hash rate higher. If we look at the number of master nodes, it's kind of been flat since January 2019. I couldn't get an updated version of this chart, but the nodes are now around 4,000, I think I said in the article here. Okay, so 4,600. They're still at 4,600. Nothing's changed. It's just flatlined. There hasn't been a growth in master nodes, so there's that continued supply that's not being sucked out of the market. You can see since 2015, master nodes just continually suck 1K Dash set aside for master node, set it aside for a master node. So that's continually sucking supply out of the market. Since January 2019, hasn't been the case. Here's PrivateSend transactions per day. This is, you can see, just broke 100 recently. So it's not like it's even it's a small fraction of the total transactions per day. But it is rising. More people are clearly using it, or one entity or some entity is clearly using it more. So to really see this have some sort of bullish lens, you'd want just exponential increase, right? Like 100 per day is nothing compared to any other privacy coin. Looking at mixing transactions per day, those are also near all-time highs. You can see ever since January 2019, it just spiked. And it's just kind of stayed up here. So clearly somebody's using mixing, someone's using privacy-related features on Dash. Over the next few months, if you're bullish on Dash, you want to see that increasing. If we look at transactions per day in the line here and average transaction values in the fill, you can see that in general, other than these spikes, which were stress tests of the network, transactions per day is certainly up month over month, week over week, year over year, but it's nothing exciting, right? It's just a slow bump up. And they certainly have a lot of transactions compared to other networks. Looking at average transaction values, quite low here. As you see transactions per day increase, you'd expect average transaction values to come down just because if transactions per day keep increasing, there's clearly some benefit to sending microtransactions or small transactions versus large transactions. Looking at NVT, inverse metric of economic utility, and daily active addresses here. You can see daily active addresses in the all-time high range, certainly, between 80 and 90K. So it's up year over year. If you're bullish, you just want to see this, spiking, increasing week over week, month over month. That says that there's new people buying into the network or new entities, whether it be exchanges or individuals. You don't have a rise in daily active addresses that isn't eventually bullish. NVT has come down to multi-year lows briefly, and it's started to increase again. So with the March 12th price drop, NVT dropped pretty substantially. So as of now, there's nothing too bullish or exciting about this. It's certainly, at a range low, but it's not like pushing lows or suggesting that there's a growing on-chain utility that we're not seeing elsewhere. Looking at MVRV, the fill here, and price is the line. Anytime it's been below 0.5, it's generally been a good time to buy. You can see that hasn't really been the case historically, just more recently. Anytime it's above 3, it's been a good sell. And again, more or less since 2016, not necessarily since inception. So certainly says there's plenty of upside here from a market cap versus realized cap perspective. Looking at the GitHub, like I said, this is the main repo. It's come down over the past few months, just activity-wise, depending on how you want to view commits on a repo, whether or not they're useful at all when you're determining value of a coin. But so development isn't dead, certainly, but it's down month over month recently. This is their Dash Improvement Protocol repo. Again, kind of ghost town, effectively dead. And if we look at Google Trends for Dash, nothing too exciting. A little bit of a blip recently, but overall, essentially at post-2017 lows. Let's look at some technicals. We have the 50 and the 200 EMA, yearly pivots, VPVR, RSI, and volume. In general, this isn't a bullish or bearish picture. It had this massive range, hit a high, hit a low. When you see that, the trend is basically indeterminate. You can see the EMAs have crossed several times versus a multi-month trend. So much different over the past year. What I want to see if I'm bullish is a break above this yearly pivot, above this VPVR zone, bullish 5200 cross. So anything above 90, above 100, psychological resistance, that sort of thing. And I'd be looking for a move to 200. Again, psychological resistance, previous high, yearly pivot, VPVR, all that sort of stuff. Until then, it's kind of stuck to this range. So if it breaks highs, I'd expect 200. If it breaks lows, if it breaks 25 again, there's really no support until, if it breaks 35 again, there's really no support until like 15, just because there's been no price history since 2017. So there's really no support onto the downside. You're just looking at resistance to the upside here. Looking at the cloud, it's definitely more bearish than bullish. But again, it's established this range high, range low. It's going to put in this 50% level. 88 will continue to act as a magnet for price as it did from the lows on the way up. You can see there's a bullish TK cross here. Price is below the cloud. I mean, all this stuff is just a garbled mess. Nothing trend-wise that's clean that you want to take a trade on, that I want to take a trade on, certainly. What you want to see is price floating into the cloud, break above the cloud, a retest of the Kijun, higher highs, that sort of thing. That's a trend that's easily tradable on this daily time frame. Or even a break below the cloud with a retest of the Kijun, denials of the Tenkin, continued denials of the Tenkin, that sort of thing. very smooth trends to trade. This straight up, straight down, extremely difficult, brutal, heart-wrenching, difficult, unless you're trading lower time frames. So this is not a picture that's welcoming to people first looking at Dash to see it. Oh, it hit 30 the other day, then it hit 130, and now it's back at 30. That's not welcoming to anybody. Dash BTC, much of the same. Essentially, it's been below the 200 EMA since 2018. Just stayed below, denied at the 50 several times. Had this nice pop recently with everything else in the market. And now it's at lows again. So if it breaks this low, again, there's no support here to the downside. If it doesn't hold at 005, which is a psychological support, there's really nothing until 0022 as far as the VPVR level. So Dash, if you compare it to all the other altcoins you could buy and say, here's the environment of altcoins, there are certainly things that look like buys, things that look like sells, things that look like I personally don't want to touch them for at least a month until they figure themselves out. This is one of them. Dash USD, Dash BTC just doesn't look appetizing at all. This could form a falling wedge over time. Another thing I'm looking at, if I'm looking at this chart, is this multi-year consolidation. Just wide-ranging mess that it took before it broke out. And it's sort of back in that range again. So if I'm bullish, I want to see price above the 200. I want to see a golden cross. I want to see price above 0.0111, which is this high volume zone on the VPVR. Plenty of upside resistance to 0.1 or 0.2. But those are the sort of things you want to see if you're bullish. You don't want to see this. You don't want to see threatening new lows with no support to the downside.